right, let's get back over to Mike Apple at 680 and trade, tariffs, all of that good, not good stuff. Let's get over to you with an update on this one, and this one involving China, Mike.
Yes, indeed, Melanie. Good morning. We've got the Trump administration talking about another $50 billion worth of trade tariffs against China. Now, they had warned about this about a month ago, and things had kind of settled down. But you know what? We've got the risk on this that it could derail the North Korean denuclearization talks. Plus, one of the top officials in the Trump administration, Gary Cohn, saying that this could also offset all of the benefits to the U.S. economy that tax reform had earlier this year. So Donald Trump, though, following through on a policy promise from the election campaign to tighten restrictions on Chinese trade, looking to offset a big trade deficit, which is estimated at over $300 billion. Markets don't like it, of course. We've seen this on several occasions. Every time the trade tariff idea comes up, markets fall, briefly at least. This morning, however, the Dow Futures Index is down 150 points in early activity. Now, contrast that to what we saw yesterday on Bay Street, where the TSX closed within 100 points of its all-time record high. We've seen tech stocks very strong recently, the mining sector, bank stocks, energy play. Bay Street all of a sudden is one of the better performers of the G7 on a stock basis, up in 8 of the past 9 trading days. So a little bit of a rally going on the Toronto market. Contrast that to, interestingly enough, what we're seeing for the Canadian dollar this morning, which is at its lowest level in a year. In fact, one of the currency analysts at TD Bank yesterday said the Canadian dollar is one of the world's most hated currencies right now because of, well, trade risk, the NAFTA file. We also have the U.S. Central Bank expected to be much more aggressive on interest rates over the rest of this year, raising rates in the U.S., maybe not so aggressive at the Bank of Canada. So where does the money go? Right to the U.S. and away from the Canadian dollar, which this morning is at barely above 76 cents U.S. And coming into the trading day this morning, we're also looking at some statistics out of Ottawa regarding the effect of tighter mortgage rules that were brought into place at the start of the year. And this has actually managed to lower the debt levels of some Canadians, as the debt-to-income ratio for households fell back from a record in the first quarter. So some positive signals potentially for Canadians as interest rates do go up over the course of time. And according to the stats, we're paying our bills on time with debt delinquency rates also falling in the first quarter. Those are